think I can guarantee to you is that you won't have heard of Time to Act. So I'm going to spend a little bit of time this evening introducing the group to you, telling you a bit about what we do. You won't have heard from us, of us, because we are a pre-IPO company preparing our IPO at present. And so one of the clearly valid questions is, are you insane trying to IPO into this market at the moment? And yes, it is incredibly difficult. I've worked in finance on and off for 30 years, and these are the worst market conditions I've ever seen in terms of raising listed capital, in terms of raising private capital for small startup technology businesses. It is really, really hard work, but that doesn't mean that you shouldn't try. So who and what are we? I've put a description on here. I'm not intending to read out the whole description, but there are some clearly important words in there: clean tech, renewables, energy transition, net zero, call it whatever you like, pick a word, pick a phrase, but that's the space that we play in. We are a group of small businesses, and we are an operating group, and that's an important message to give across, is that we are not a venture capital company, we're not a private equity company, we're not an investment company, we are an operating group of companies. So we have two businesses, two main businesses. I'll talk a little bit about both of those today. We own them 100%, and we run those businesses. We operate them. We don't just own them, we operate them. And in terms of operating, what does that mean? I think the most important thing it means when you're talking about small businesses, small technology businesses, small businesses with technology in renewables and in clean tech, is what we do is we help them to grow up. And that is so important when it comes to talking to investors and trying to get an IPO done, because when I look around the marketplace for small cap, clean tech, renewable companies, it's been, to be quite frank, a car crash. A car crash for the last 10 years and a continuing car crash at the moment. Now, why is that? One of the very clear reasons in our mind is that these businesses come to market, you as investors, the institutions as investors, do their due diligence on the technology, but don't really ask the questions. Can you take that technology to market on time and on cost? Do you have the financial planning? Do you have the business plan? Do you have the strategic plan? Do you have the operating plan? Do you have the commercialization plan? Small technology businesses don't have those. Don't always have those. And that is what we add to our businesses. We provide that arm around the businesses so the technologists developing the technology can get on with developing technology, and we raise money, we put in place the strategies, the business models, the business plans, everything that should de-risk the chances of success for any one of those businesses. And that is so important. It is absolutely vital in terms of understanding what we do, because that really does, I think, differentiate ourselves from a lot of small cap technology businesses. So my favourite expression is the energy transition. I agree with Stephen, it's a transition. We're not going to go away from gas immediately. In fact, we use quite a lot of gas in one of our big furnaces, and I'll come and talk about that. But we play in the energy transition. It's a transition from coal and burning other bits and pieces into using more sustainable forms of renewable and clean energy. And some of the themes within the energy transition that we play into are that electricity is going to drive, ultimately, everything. It will drive heat, it will drive transportation, and so we spend quite a lot of time thinking about electricity and electrical power generation. Geopolitical tensions are really already starting to stress out a lot of supply chains. Our particular supply chain that we're focused on is rare earth metals, or specifically rare earth magnets. Rare earth magnets go into every single electric vehicle, just about every single wind turbine. 90% of the world's rare earth magnets come out of China, and China is at the moment busy starting to try and weaponize the supply of those rare earth magnets. And then finally, we spend an awful lot of time, as I said, thinking about electricity, but we spend a lot of time thinking about hydrogen and ammonia as well, and particularly hydrogen. I'm going to talk a lot about Johnson Matthey, and I'm going to talk about different colours of blue hydrogen, particularly blue hydrogen. So there, very briefly, is the structure of our group. We try to use the logos to show that we are an operating group. We control and run these businesses, and using that commonality of logos across the group. We have two main businesses. One is Diffusion Alloys. Diffusion Alloys is a coatings company, provides coatings specifically for use in renewable and clean technology applications. That business used to coat gas turbine blades. We shut that business down 2.5 years ago now. When we shut it down, we said goodbye to 75% of our revenues. We really went back to a minimum viable level of revenue in that business, and we're now busy growing that into the clean tech space. We've got a unique relationship with Johnson Matthey, where we struck that relationship just about a year ago today, actually. Second business within the portfolio is Greenspur. Greenspur designs rare earth-free generators for predominantly the wind turbine industry. It's a pre-revenue company. Diffusion Alloy is already making significant revenues. Greenspur is a pre-revenue company, but some very, very interesting technology going on in there. The other two businesses are really, they're tiny little things. I'm not actually going to talk about those. To show that a little bit in pictures, just to make it a bit easier to understand, Diffusion Alloys it's an absolutely unique company. So when I've ringed their blue hydrogen, we are the only company in the world that coats the large tubes and pipes that go into blue hydrogen facilities. We are, we think, the only company in Europe, possibly in the world, that coats the components that go into solid oxide fuel cells and solid oxide electrolyzers. And we're just applying our technology, some of that technology, into the ammonia market, which is increasingly being seen as a derivative of the hydrogen market. In terms of electrification of everything, sticking with Diffusion Alloys, Diffusion Alloys is the only decoatings company in the world that can coat the internals of liquid lead reformers, liquid lead Gen 4 nuclear reactors. And that is a picture at the bottom right of a fuel cell, so we can coat those fuel cells. And then generators, the Greenspur generator you can put into a big offshore horizontal axis wind turbine, you can put it into a small onshore vertical axis wind turbine. But what is more important almost than looking at my wonderful picture up there and the picture of my executive team is our non-executive directors. We use non-executive directors not just for governance. It's important to have non-executive directors ticking the governance boxes, but we use our non-execs to help us help our businesses to grow up. So we've got an Andrew, who was the CFO of Siemens in the UK, the CFO of Siemens Gamesa, the second largest wind turbine company in the world. Rich was the managing director UK of Nordex, which is a second-line wind turbine company, knows more about generators than anyone I've ever met. Andy, as opposed to Andrew, Andy is a scale-up expert, so he grew his own business from £1 million of sales to £50 million of sales before selling it to a Swedish PLC. So he helps us in terms of how do you actually scale up a business like Diffusion Alloys, which is really trying to scale up really very, very fast at the moment. And then Lisa's our managing director of our Diffusion Alloys business, but sits on the board of Time to Act in a non-exec capacity. And she, more than any single person, has led the turnaround of the Diffusion Alloys business. So Diffusion Alloys, I mentioned the name a couple of times. What does it do? It is truly, truly, truly a unique company. So really the world's only coating company that coats those blue hydrogen components, as I mentioned. It's quite extraordinary, really, how good they are for such a small business. And I can spend some time, I think probably at another time, talking about why it is unique and why it is the only company with this capability in the world. But we have this unique supply chain agreement with Johnson Matthey. So we are the preferred coater for Johnson Matthey. So every time you see that Johnson Matthey announces a new blue hydrogen plant, we will be coating the components that go into that. Just so you understand, or to help you understand the difference between all these different colors of hydrogen. So blue hydrogen is standard methane produced hydrogen, but with a carbon capture element. And we coat the components actually that go into the carbon capture unit. Green hydrogen is hydrogen which is produced using renewable electricity in an electrolyzer, so electrolyzing water, turning water into hydrogen. I'd just asked you to look at the chart on the bottom left, because this is actually the first time that I've shown this chart to anyone outside of the company. So what we do in diffusion alloys is we coat particularly large parts. And when I say large, the largest part that we coat is a tube or a pipe that's 18 meters long. So we have a furnace which is 21 meters long. That furnace weighs 70 tons. It's an absolute huge beast. So very, very big pieces. If you look back to COVID 2020, 2021, that market for coating those large parts disappeared completely, went down to zero. Last year we turned over, or the year we're just finishing actually, we turned over about 700,000 of coating those large parts. If you look at our front log, this is not a backlog, this is not contracted work, this is work that we expect to win because we are the sole or preferred coating provider. At the end of fiscal 22, March 2022, that backlog was £618,000. Today, that backlog is £19.4 million for a business which is at the moment turning over, as I say, £700,000 a year. And if I were to pick one single job, which is the most important job within our group at the moment, it is turning that front log into revenues. We don't control the timing of that. We're right at the end of the production chain. So when a blue hydrogen plant is announced, it goes through FEED, front-end engineering and design, then it goes through FID, final investment decision, then the plant engineering company starts to order the components, they'll buy the tubes and the pipes, and then the tubes and the pipes will come to us for coating. So we're right at the end of that process. We never really have an order backlog as such, because the moment that we get the purchase order, it goes straight into the plant and we start producing it. So we look at the front log, and that front log is just getting bigger and bigger and bigger, and is waiting to burst. And it will burst. It'll happen. It's just a question of when will it happen, how quickly will it happen, and can we make sure that we turn it into profitable revenues. So what we did as a little coatings company is that we struck a strategic relationship with Johnson Matthey almost exactly a year ago. So Johnson Matthey contracted with us to quadruple our manufacturing capacity, and we quadruple our manufacturing capacity without actually spending any money. It's all about supply. It's all about moving materials and getting parts in more effectively. So the capex requirement of that is almost zero, and we are their sole coater worldwide. So every single time that you see, as I say, an announcement from Johnson Matthey that they've won a blue hydrogen plant, we're going to get the coating for that. Greenspur is our development business, so I call it pre-revenues. We have some initial revenues last year, and we have some initial revenues this year. It's really a design services business. It's taking intellectual property, turning intellectual property into a multi-physics model, so modelling thermal characteristics, electromagnetic characteristics, mechanical characteristics of how a generator performs in real life, more like a digital twin, and we are getting that business ready to really go into the monetization stage. So talking to our first customers at the moment, and talking with some very, very big customers within that business. And what we have the luxury, therefore, of doing across the board in Time to Act is that we don't have to rush into revenue generation. We'd love to have more revenues than we do at the moment, but revenue generation will come for us sequentially. So the first target is to get that huge front log of work in the blue hydrogen industry into the plant. Second target is to start to coat even more components than we do in the solid oxide world. Third is then to get the Greenspur technology into the small distributed wind turbine world, and we're looking at a small, tiny acquisition there. And then nuclear, and then ammonia, and then large offshore wind turbines, and then magnet technology. So we're very progressively and very sequentially, rather than any form of rush, getting into each of these new market applications. And rushing would not be a particularly clever thing to do. I'm not going to talk too much about financials just because we're in the midst of an IPO process. I have to be a little bit cautious about what I'm allowed to say. There will be a lot that goes into the emissions document. The IPO will happen in April, so we have a series of investors lined up already who will provide the core piece of the IPO. One of the other IPO problems very clearly within cleantech and renewables has been the absolutely ludicrous levels of valuation that some of these businesses have come to market on over the last couple of years, and that's not our game. So I own 40% of the shares of the company. I'm not selling a single share because this IPO is going to come at a very, very deep discounted share price, reflecting the current market conditions. We're not going to raise as much money as we will do over the longer term, but this is not going to be an IPO where we are jamming stock down every single possible buyer's throat. But to give a basic feel of the numbers, every single time Johnson Matthey announces a blue hydrogen plant, it's about £1 million worth of revenues for us. So in a business which last year is turning over about £1.5 million, has that front log of about £20 million, every Johnson Matthey order is about £1 million for us. And that's £1 million with broadly a 50% profit margin or 50% gross profit margin attached to it in a plant which has a very, very, very low overhead. So there's an obvious quoted, still just about quoted, coatings company on the small cap market segment. If you want to compare us to them, when you get our emission document, look at what our overhead is and look at what their overhead is. And our overhead is less than half of our obvious competitors' overhead. We are very, very, very tightly managed. So that business is going to ramp up very, very quickly. I spent a bit of time with the CEO, with the MD of that business, trying to debate how big it's going to get. Bearing in mind, as I said, that every single blue hydrogen plant order is about £1 million of revenues for us. You look at some of the forecasts out there from the Hydrogen Council, they're forecasting 600 blue hydrogen plants around the world by 2050, I think it is. No, 2035. I don't think anywhere near that number will get built, but let's assume that they did. 600, 40% market share from Johnson Matthey is 240 plants, that's 240 million revenues, and I don't think it's going to be quite that simple. But that gives you a sort of scale, feel of the scale of the opportunity that we're facing. And what's really happening is that all of the existing grey hydrogen, the polluting grey hydrogen out there in the world is getting converted to blue hydrogen. Will get progressively converted to blue hydrogen over the course of the next few years. So IPO coming, Q2, I think it's going to come in April. We're not going to raise a significant amount of new money because the market conditions just aren't that good. There's a little business out there which I think is our closest peer company called DG Innovate, which is doing quite similar things to us, but in the electric vehicle sector. If you took their valuation and applied it to us, you get a £1.27 share price. We're not going to come to market anywhere near that level. So I think we will be very, very attractively valued. We don't need a lot of money. We have £1.4 billion of cash on the balance sheet. Put on there a use of funds. Actually, the second line of that, Diffusion Alloys, 2-year capex. I think that's all going to get funded by UK RI or by government grants. So we're very, very assiduous in terms of the way that we look at the funding of our business and the way that we secure as much government and grant funding as we possibly can. And what we basically are doing at the moment is making sure that our £1.4 million of cash lasts as long as possible and gets us as close to group cash flow break even as we can. And that's probably our key financial target. Well, firstly, is not to run out of cash, which we won't do. But secondly is get to group cash flow break even as quickly as possible. And that will be, I say, within the next 2 to 3 years. I think it'll be in about 2 years' time. So we're pretty conservative in terms of the way that we run the group. We really keep a very strong lid on our spending, which allows us to go into this IPO and not try and need to raise a great deal of money. So that's really the summary. I didn't really touch on the first point because this little marketing pitch was given to us recently that we provide picks and shovels for the energy transition. The idea is that we produce some of the tools, some of the essential components. But the important message, I think, behind it is that we're not trying to invent nuclear fusion. We're not trying to invent brand new chemical processes. We're taking relatively well understood, established technology and applying that to a huge growth market. So the level of technology risk that you have with us is very different to some other businesses that have come to market. As I say, we're not trying to reinvent the world. We're not trying to invent nuclear fusion. We are very, very well managed, particularly from our non-executive directors, if I could say, if I'm allowed to say that. But we, and I think it's so important going into an IPO that our potential investors understand that we are not going to throw away our IPO money. I've seen so many businesses, and too many businesses do this, come to market as small cap businesses. The first thing you do is spend £750,000 on AIM listing fees. The second thing you do is double everyone's remuneration. So all of a sudden you have a board of directors costing you £700,000 a year. That's not going to happen. It's not going to happen with us. I wish it did, because I don't get paid very much. I don't get paid anything, in fact. But we do this on a very, very low risk, a carefully controlled basis. And this is why this IPO is very, very retail focused, is that we're not trying to get a significant amount of money on board from institutional investors. We're very tightly controlling the process. We don't want to raise too much money, but we're looking at retail investors, because I think you as retail investors are some of the sovereign investors out there. I think a lot of the institutions that we talk to are so badly burned by some of the stuff that they've owned over the last couple of years that they're not prepared to look at us. We will do it differently. And that's it, I think. That's probably enough.
Thank you, Chris. We've got a question at the front, so go on, Nick.
Sorry, I'm a bit confused about this. Your coatings, is that proprietary technology?
It's not patented.
Right.
It's old technology, but it is technology where other people who have performed that sort of coating in the past have just lost the know-how. And there are fairly obvious reasons as to why they've lost the know-how, because they've gone into other markets. The other markets have moved onwards. They've followed those markets, but they've lost the capability to perform diffusion coatings. So it is a 60-year-old coating technology, but we're just about the only company that can really properly do it for some of these new applications.
And are there barriers to entry for a competitor? Because that's the next stage, isn't it?
So any competitor could break into our plant, steal some of our coatings power, do an analysis of what's in the powder and work out what's in it, buy themselves a furnace, turn the furnace on and try and coat a part, and it will not work.
It's like Kentucky Fried Chicken.
Absolutely, yeah.
And just the other question, which, because I'm interested, who's doing the IPO?
The corporate advisor is Novum. And our broker, we agreed our brokerage yesterday, so I haven't signed the paperwork yet, so I probably shouldn't tell you until I've actually signed that.
Fair enough. Thanks.
Thanks, Nick. Question in the middle here. Thanks.
So just a quick question on the coatings and why you need them. Is it because hydrogen leaks, or is it because it's corrosive?
It's because it's corrosive. So what our coatings protect against is primarily corrosion. So there is another small quoted coatings company out there that I referred to, which prevents primarily erosion. We are corrosion. So all of these high temperature processes, like producing hydrogen or producing hydrogen from a solid oxide fuel cell, they operate at high temperatures. When you have a high temperature process, you get impurities like carbon in the atmosphere, or sulfur in the atmosphere, or chromium in the atmosphere, which can leach out of the base metals. We protect against the corrosive effect of those rogue elements.
Okay, and then the wind turbines with the generators that have got the don't have the rare earth metals, how near are you in efficiency to the ones that do, and cost, or how far away are you?
So ours is a brand new design. It uses ferrite magnets. Ferrite magnets are standard ordinary fridge magnets. Ferrite magnets are pretty much 1/10 of the power of a rare earth magnet. So in theory, we would have to use 10 times the volume of magnets in order to compete with an existing generator. 10 times the volume of magnets would mean 10 times the weight. And clearly, if you're running a big wind turbine in the middle of the North Sea, you're very sensitive to the amount of weight at the top of the pole. So that's what we compete on, is what's called our power density, mass per kilogram, per kilowatt, or mass per megawatt. And when we started this journey, we were hopelessly uncompetitive on mass per kilowatt. Now we are very, very competitive. So in the current iteration, we have an equivalent mass per kilowatt to existing rare earth generators at half the price.
Okay, that's good. Thank you.
Great, thank you. Any more questions from the floor? In which case I'll jump in. You mentioned sort of obviously on the coating side, the sort of opportunity in front of that business, but I wonder kind of how you would scale up the capacity and what the kind of key obstacles to that might be.
So as I mentioned, the agreement with Johnson Matthey requires that we scale up our capacity fourfold. We do that primarily through improving workflow.
Right.
We use some subcontracting, and so one of the easier things to find, actually, particularly in the northeast where we're based, is other furnaces.
Yeah.
But you can't use a furnace to do our coating if you don't understand how the powder works and how to pack the components. So actually, to outsource capacity using other furnaces is a relatively easy way of expanding capacity.
Okay. And what about people? Is that a challenge as
People's
well?
the challenging one.
Yeah.
People is more challenging than capacity. Look, in the Greenspur business, one of the things we looked at is, would we ever get into building multi-megawatt generators? And a multi-megawatt generator, at a 15 megawatts, our generator would weigh 400 tons.
Right.
And you question whether anyone would build a factory to produce those.
Yeah.
But even if we decided that we could, staffing it is the biggest challenge by a long way.
So what can you do to mitigate that? I mean,
so we operate a design services model.
right.
So what we do is we take our IP, we package the IP into a multi-physics design or model, and then sell the model.
Right. Okay, that makes sense.
Or sell a design based upon the model.
Sure. And I mean, sorry, there's a question at the back of the room. I'll go to that. Was there? Or no? Sorry, I thought somebody was raising their hand. No, what I was going to ask was, you've obviously got these two main businesses. You've got the two smaller ones.
Yep.
I mean, would you consider bringing more within the group? Because I guess what you talked about was that you can kind of add the commercial know-how on top of these technologies. Are you seeing sort of other opportunities to add to
what I think we try and do, if you were to sum it up into 3 words, is strategy, finance, and commercialization.
Yeah.
That's really how we help the businesses that we own grow up.
Sure.
And once you have that sweet shop methodology, then you can apply that to all sorts of new technologies, different technologies. So yes, we would do that. Will we do it today? No.
Sure.
Because we have plenty on our plate, just delivering coatings and delivering the generator.
Yeah.
Will we do it tomorrow? Yes, absolutely. But we also have a model where we don't pay cash for acquisitions. We want to acquire businesses using our shares as currency, which is one of the reasons for doing a stock market listing.
Right.
It's not our job to hand over our hard-won cash to some technologist who's developed a whizzing new technology to pay him out and then try and commercialise it ourselves. So we use cash. We use shares, excuse me.
Sure, that makes sense. Any more questions in the room?
Yeah, Chris, I've got one for you.
You had the worst question last time. Go
on. How much you mentioned about government grant
Yep.
funding? I mean, that's obviously that's a long drawn-out process, no doubt. But how much is possible, do you think?
So at the moment, there is a government project which I think is called the GIGA project, which is the Green Infrastructure Growth something, and that is a £964 million grant funding project, I think, which will kick off at the end of this year, will be awarded during 2025, where I think we will partner with Johnson Matthey on that. So getting into bed with Johnson Matthey and partnering in grant applications, it obviously sets you off in pretty much the right direction from go.
Absolutely.
So it's grants are. We've got a person who sits on one of our subsidiary boards actually, who is just really, really good at writing grant applications. And when I see a grant application and question on page 1 is repeated on page 3 and page 5, and you have to write the same answer 3 times, I run out of patience and throw it out the window. But he's very, very good at it. So actually accessing grant technology is one of the good things that Greenspur has always been able to do, which we have 2 grant projects in the last 2 years within diffusion alloys, so we're good at it. We're okay at it.
And the other thing you mentioned a slide there with timetable of applications.
Which one's that?
The slide with the various arrows of timetable of applications you've got there. There's the timeline. Monetisation sequence.
Yep.
Is that set in stone, or is that dependent on the IPO, or?
No, so this is more an aspiration, a guide, a general sense of the way that we approach monetisation of the various different technologies that we have. So there are years along the bottom. Don't read too much into the years. We're not sticking with each of those. What we're basically saying here is that we've got a massive job at the moment to create that £20 million front log of orders into production and into revenues. But once we've got a handle on that, then actually we're developing a brand new technology, a brand new coating process, which has application for the solid oxide fuel cell industry, which we've got quite a number of companies who are quite interested in that, but we're not forcing the pace of it. Right. You know, one of the things that we will use IPO funding for is just greasing the wheels a little bit of the organisation. Everyone is maxed out to 100%. So if I asked our coatings people to do green hydrogen and solid oxide fuel cells today, they'd take their eyes off of blue hydrogen. So we just do it sequentially.
Thank you.
Excellent. Great.
Okay.
Thank you very much, Chris.